The trader who stole billions, Bernie Madoff scam. Consider this: audacious deception, a ruthless game, a lure of steady profits led to the downfall of a financial titan, and a $65 billion betrayal. Welcome to the world of Bernie Madoff. Bernard Lawrence Madoff, or as the world knows him, Bernie Madoff, was a name that echoed within the vaunted halls of Wall Street. His reputation, cemented through years of consistent success, was nothing short of extraordinary. He was the picture of the American dream. Realized a self-made financial titan, founder of Bernie Madoff Investment Securities LLC, and for a time, the chairman of the NASDAQ stock market. Founded in 1960, Madoff's firm was the embodiment of a golden era, a time when the capitalist American dream stood strong, where the pursuit of wealth was the ultimate goal, and a savvy investment could take you from 0 to 100 in the blink of an eye. His firm promised and delivered consistent, above-market returns, and affected by the volatility of the financial markets. From Wall Street traders to everyday individuals, who could resist the allure of easy money? As the firm grew, it was not just Wall Street bigwigs who were drawn in. Everyday people, dreaming of a better life, handed over their hard-earned money to Madoff. Take Laura, a single mother, who invested her entire inheritance with Madoff. While she worked tirelessly by day, she'd find solace by night dreaming of a future secured by Madoff's promised returns. Or the Rodriguez family, who trusted their children's college funds to Madoff's promise of steady returns for an Ivy League education, was within touching distance. Then there was Alan, an entrepreneur, who believed in Madoff's strategy so much, he invested most of his business profits in the firm. With every successful business deal, he saw his confidence in Madoff deepen, as he envisioned an early retirement filled with luxury and leisure. Little did they know, they were setting foot on a financial landmine, waiting to detonate. Behind this image of trust and success, a storm was brewing, a ticking time bomb that would shake Wall Street to its very core. Yet, perhaps the most captivating element in this high-stakes drama was the sheer perception of the man. To the public, Bernie was an oracle of financial wisdom. To some, even a hero. It's almost funny how perceptions can overshadow glaring realities. Harry Markopolos, a financial expert, once quipped that Madoff's consistent returns were mathematically impossible. But who was Harry in the grander scheme of things? Just a voice, lost in the cacophony of Madoff's fanfare. At the heart of Bernie's breakthrough was his supposed investment strategy, the split-strike conversion, a strategy as complex as its name, was the shield behind which the master illusionist hid his antics. Now, for the layperson, this strategy might sound like a high-tech maneuver straight out of science fiction, but in reality, it was a mere smokescreen, hiding a much simpler and more insidious operation: a Ponzi scheme. To understand the depth of his stratagem, one must look at market comparisons. While the S&P 500, a reliable measure of the market's health, fluctuated with the economic climate, Bernie's returns remained suspiciously steady. Between 1992 and 2008, the S&P 500 saw returns ranging from a loss of 38.5% to gains of over 30%. But Madoff, his annual returns hovered consistently between 10% and 12%. Magic? more like malice. Let's also take a moment to address the elephant in the room. How did Bernie manage this Ponzi scheme on such a massive scale? Here's where his strategies get an honorary mention. The influx of fresh funds from starry-eyed investors was used to pay off older ones. It was a financial merry-go-round, but instead of music, it played the soothing lullaby of faux assurances. As long as new investments kept coming in, Bernie's ship remained afloat. In 2008, just before his scheme unraveled, Madoff's statements showed client holdings of $65 billion. As we delve deeper into this riveting tale, remember the adage, the higher you rise, the harder you fall. That's the part where our friend Bernie had seemingly overlooked in his audacious scheming. It all began with a little hint of suspicion, a quiet whisper in the financial world. And this suspicion wasn't born in the SEC's corridors or the halls of a high-powered law firm. Instead, it started with an unassuming figure named Harry Markopolos. Remember him? The voice lost in the cacophony of Madoff's fanfare. While Madoff charmed Wall Street with his suave demeanor and consistent returns, Markopolos did the unthinkable. He doubted. He questioned the golden boy of Wall Street. In 1999, Markopolos, with his team, concluded that Madoff's reported gains were highly likely to be fraudulent. The returns were just too good, too consistent, the risk too low. The revelation, however, was no grand event. There were no dramatic courtroom reveals or cinematic press conferences. It was a letter, a 17-page letter written by Markopolos and delivered to the SEC in 2005, outlining his suspicions and findings about Madoff's operations. Yet, sadly, it was met with the same response as Markopolos' previous attempts: a bureaucratic shrug and deafening silence. By the time the investigation into Madoff's operations began, it was akin to closing the barn door after the horse had bolted. However, this wasn't a simple case of financial mismanagement or bookkeeping errors. It was, in fact, the discovery of a seismic fraud. Bernie's sophisticated operation, built on charisma and confidence, was finally revealed for what it was: a Ponzi scheme. False trading reports, fabricated statements, non-existent securities. The list was as long as it was audacious. It wasn't just an illusion. It was a grand illusion. December 2008 marked the first wave of legal consequences that would swallow Madoff completely. Madoff was arrested on December 11, 2008, charged with securities fraud in what was perhaps the most significant understatement of the century. The immediate consequence was the loss of vast fortunes. Billions of dollars evaporated into thin air. Over 4,800 client accounts, representing a staggering $65 billion, were wiped out overnight. The internal dynamics of the Madoff clan was, to put it mildly, tense. Instead of warring families, there's a Ponzi scheme. Ruth, his wife, and their sons Andrew and Mark were tangled in this web of deceit, albeit unsuspectingly. A family brought together by love was now being torn apart by betrayal. One particularly heart-wrenching scene was when Bernie confessed his sins to his sons, who, shocked beyond belief, turned their father in. Picture this: a tearful confession, a family shattered, and the ultimate betrayal. In conclusion, we find our protagonist. No, let's correct that. Our antagonist in a precarious situation. His empire crumbled, his family shattered, and his reputation in tatters. His next stop, the courthouse. The financial impact was staggering. The fallout from the scam resulted in over $17.5 billion in original investments going up in smoke. The shockwaves were felt far and wide, impacting investors from Florida to Tokyo. Charities, hedge funds, and wealthy private investors were all left staring into the financial abyss. The scam claimed victims as varied as Steven Spielberg's Wunderkinder Foundation and Elie Wiesel's Foundation for Humanity. Imagine that. Even the man who survived the Holocaust fell victim to Madoff's Machiavellian machinations. Criminal charges were, as you'd expect, aplenty. Madoff was slammed with 11 federal felonies, including securities fraud, investment advisor fraud, and mail fraud. The judge's gavel was practically on fire, and on June 29, 2009, Madoff was sentenced to 150 years in prison, the maximum allowed. The societal impact was far-reaching, and in many ways, still echoing today. The Madoff scandal exposed the dark underbelly of the financial world and shook the public's faith in Wall Street. If Madoff, the ex-chairman of NASDAQ, could pull off such a heist, who couldn't? Madoff's tale concluded in the cold, bleak confines of a prison cell. He passed away in April 2021, aged 82, leaving behind a legacy etched in notoriety and deceit. As we end our journey through this dark chapter in financial history, let us part with these thoughts. Madoff's story is not just a tragic tale of one man's greed, the traitor who stole billions. It's a reflection of our collective vulnerabilities, our aspirations, and, sadly, our gullibility. Was he a genius, a master manipulator, or just a man blinded by his own hubris? The answer is perhaps a mix of them all. Sometimes, it's just the glint of a calm man's smile, promising you the world. Let the echoes of this tale serve as a grim reminder, a guide for a safer and more ethical financial future, and a lesson for generations to come.